125 years ago, the first New York Auto Show opened its doors, and I think shortly thereafter that, they were talking about tariffs back then. So, time is a flat circle, and yet again, the topic du jour today, here in 2025, is tariffs. Automakers talking about how they can respond to it. Some of them telling me they're going by day to day, month to month, how they're going to respond via prices or incentives, things like that. Other automakers telling me that, if they get the exemption for auto parts, that might actually help a lot. It might actually be a big difference for them, and they could possibly live with the foreign export tariffs that Trump has put in place. Lots going on here from both an EV and also an ICE or gas-powered car situation here. Joining me now, Steve Center, COO of Kia America. Thanks again for joining us.
My pleasure.
I really appreciate it. Before we get into these exciting vehicles, one right behind us, I got to talk to you about topic of the day here is tariffs. Last time we spoke, we talked about it briefly. We didn't talk about it post Trump's 25% sector tariffs, right? So what's sort of your response now? We said last time, you said, we're not going to follow business rules, right? So what does that mean?
Well, this is very complicated. And the impact of this is very unclear, although I can say a couple of things. It affects the whole industry, affects every automaker differently, depending on where your parts came from now, the metal in the parts comes from, the car's finally assembled. So every segment isn't impacted the same way. So for instance, our K4 is assembled in Mexico. Some of our competitors' products might not be. So in terms of how you interpret all this, we're trying to understand what the bill's going to be and how we're going to deal with it. But we don't have any imminent plans to raise prices as a result. We want to understand what the impact is and see how the market materializes going forward.
A lot of other automakers tell me it's day by day, week by week, even hour by hour based on how things are changing. Yeah. And you're talking about how prices sort of staying the same for now. But one way that you can sort of control costs, and we've talked about this, is building in America. And that's what you're doing with some of these vehicles, right?
And we absolutely do. We've had for well over a decade a factory in West Point, Georgia, where we build the Telluride, we build the Sorento, we build the Sportage there, and we just started building the EV9 and the EV6 in the same factory. So we did a couple of things. We proved you can build internal combustion cars and EVs in the same factory. That's huge. As well, we just opened the Meta plant outside of Savannah, Georgia, on the other side of the state. And that has over a 500,000 capacity. So as you grow, you want to shorten your supply lines. There's a battery factory complex there and the vehicle assembly plant. So we'll be able to build more components here and more cars here. And this is all before this tariff talk.
Right. It was the investment's already happening. This takes years
ago.
Billions of dollars. So
yeah.
The car right behind us is the EV4, the new EV that Kia debuted here in New York. Is this, first of all, talking about the car, but also, is this one of those cars that will be built in America?
I'm not sure yet. We haven't announced what we'll be building at that factory, but we're building 2 other EVs here, as I said. And this is an entry EV sedan meant to come in under the EV6 price-wise.
We've been seeing these EV sales for Kia in America just really taking off. What do you think why is the resonance happening? Is it because of price competitiveness?
It's the products, which includes the price-value relationship. Part of our DNA is value. I say value with a small v, meaning it's got all the technology and the features people want. It's just not cheap or a low price. We've got good products, and there's organic demand for EVs now. We just had a record first quarter for EVs, so we're growing. We're adding to the lineup, as you can see. We're going to continue to grow. We're going to make the cars here in the US and make them more accessible. So we're very excited. And the Kia dealers are real winners because they now have 2 lines, an internal combustion line and they have an EV line in sister segments, right? You have Telluride, you have EV9.
And then also you have this other ICE or gas-powered car right there. Is it, I guess my question is, with cars like the gas-powered cars, do they go for a more price-conscious consumer, at least when it comes to Kia?
I think it's a powertrain choice. at this point. People are always price sensitive, but they have a preference for the powertrain. And there are people that prefer EVs. We're getting, for EV9, for instance, huge conquest car for us. We're getting people trading in Mercedes and BMWs on that car. Who would have thought for a Kia? So the brand has a different level of acceptance.
So even with the broadening EV, go back to EVs, the broadening EV portfolio, are you seeing Tesla trade-ins? Are we seeing people like that?
Yeah, especially lately because of some of that other stuff going on out there. But that says something in that our brand is credible with those customers in that space, and that's a wonderful situation.
Right, building that credibility in EV space, especially when you can do stuff like the Tesla supercharger network, right? You guys have access to that.
Right, and the EV6 and the EV9 that we just started building in West Point, Georgia, all have the NACS adapter standard, or the NACS charge port standard. So that's a win-win, and pretty soon we're going to open the network up to all the key EV customers. Those that have the CCS plug, you just use a converter, like when you travel around Europe.
Right, so native NACS supercharging capability. Last question, Steve. I know you've been in this industry for quite a while now. You've seen it all. Kind of put us in context as to what's going on here. It's just another, ebb and flow of the business where you're going to have a trade war, we're not. Well, what's going on? It's just how it is with autos.
One of the things that I love about this business, and one of the things that's kept me in it for 45 years, has been the dynamic environment. And people in this business, whether on the manufacturing side or the dealers, are the most creative, resourceful people there are. So what's going on now? It's just more of the same. It's a different day of chaos, and we'll figure it out.
Right, and try to keep that growth going, right?
Right.
President Trump weighing a possible delay to auto tariffs. But as of now, there is a 25% tariff on all imported cars, with a 25% tariff expected to take effect no later than May 3rd on car parts. Let's go now live to the New York International Auto Show, where senior autos reporter Pras Subramanian standing by with Hyundai Motor America COO Claudia Marquez. Pras, take it away.
Yeah, Brett, thanks for that. Yeah, that's the word of the day, right? Tariffs at the auto show everywhere we go, but also new cars here at the New York Auto Show. Claudia, thank you for joining us, really appreciate it. So before we get into the new Palisade, which is right behind us, Brad talking about tariffs, sort of what everyone's talking about these days, the President Trump's sort of focus on the auto industry. What's sort of Hyundai's position on that right now from where you're seated?
Of course, our position will always be we have to take care about our customers. It's a tough situation, yes, because there is a lot of uncertainty. But first of all, I want to share, and I'm sure that you know, but obviously for the audience, Hyundai has been in the U.S. for the past 40 years. We have a strong representation in the U.S. We have a factory in Alabama. And just recently, 2 weeks ago, we opened our new Meta plant in Savannah, Georgia, where we produce our EVs, Ioniq 5 and Ioniq 9. Just to give you perspective on that, 2024, we sold 836,000 units, and about 40% of the vehicles were produced in the U.S. So we are very confident on the market. Of course, the U.S. is very important for us. We're fully committed to localization. We understand, of course, the need for investment in the U.S., and we are playing a part of that. Now, when it comes to the customers, which again is tough, and even for us, just for planning purposes, what we wanted to make sure is that we have a plan for our customers. So we launched our Hyundai Assurance Program, which is confirming and assuring to the customers that MSRPs are not going to go up, in this at least this couple of months. So we are very good in uncertainty. We call it the Hyundai Speed. Then we're doing and we're very prepared to deal with this reality, and again, always committed to the U.S.
Right, so it's a day-by-day, month-by-month plan.
Sometimes hour by hour.
Hour by hour,
Yes.
And you're planning to right now, protect your consumers. So I think looking more long-term, part of the Hyundai toolkit, I believe, is investing in America with the Meta plant, building here. Is that sort of the toolkit you guys have? Is that sort of what you guys have been leaning into, even though that's years, it's billions of dollars of investment?
Hey, we're talking about tariffs, and all of this started in the beginning of 2025. I just want to share as well that it's not only that we have been with a factory here, but in 2019, the company confirmed an investment over $12 billion, which is a part of the Savannah plant that we just inaugurated a couple of weeks ago. I mean, really building a factory takes at best 3 years. Hyundai did that in a little bit shorter time. But that's all in all to say that, I mean, it's not about tariffs, why Hyundai Motor Group is investing in the US. The US is a very important market, it's the most important market, and we are here to stay for the long run and to invest in the US.
So speaking of that U.S. market, you know, the SUVs kind of run the roost here, and the Palisade behind us is the newest one from Hyundai. Talk to us about what changes were made to this new vehicle in response to the U.S. market.
I mean, today we just left the press conference revealing the new Palisades, which I'm extremely happy and proud about. So it's the 2026 Palisades is our second generation. One of the things I am happier on many others is that for the first time we are going to have a hybrid also as powertrain. The current generation was only available on ICE. Aside of that, of course, you can see a very bold, attractive, great design. We also are introducing with a different design Palisades XRT Pro, which also was presented in here. Safety, which is extremely important for the company, always under the promise of our brand promise, is amazing.
Right.
So design, safety, technology,
Hybrid.
powertrain, exactly.
So, you know, I know hybrids are, we get that a lot of interest there in Yahoo Finance, people talk about that, but also EVs, the Ioniqs at Hyundai have been doing quite well here, right? In particular, the Ioniq 5 has been a hot seller. What's the game plan there for EVs? You know, we have the hybrid game plan here with the Palisade.
Yeah.
What's next for EVs, and how do you accentuate what you already have with the product?
I mean, Hyundai will and continues really in a long term the EV strategy. Again, Ioniq 5, Ioniq 9 being produced in the US. What is going on today, of course, is in a little bit slower adoption for some of the customers. What we're doing, of course, is offering hybrid, as we were talking, which is like the short term until customers are actually convinced. But just to give you statistics on this March, for example, which was our last month, the last month we closed, we had our best ever March and the second best ever month since the launch of Hyundai in the US. And out of that, 72% of the volume in March were hybrids, and year on year, and 38% were EVs. So we're here to stay with EVs and extremely happy about performance, design, availability. Ioniq 9 is going to be launched soon enough. Coming back to Palisades, we're going to launch in summer the ICE version, in fall the hybrid version. So many positive news in front of us.
So building in the US, electrified powertrains, new products, and price protecting customers for now.
That's
Claudia
right.
Marquez, COO, Hyundai USA. Thank you so much, really appreciate it.
Thank you so much for inviting me.
Of course, thank you so much.
Thank
And
you.
back over to you, Brad.
Thanks so much, Pras. Appreciate that. We'll have more from Pras at the New York Auto Show.
We don't have any imminent plans to raise prices as a result. We want to understand what the impact is and see how the market materializes going forward.
We understand, of course, the need for investment in the US, and we are playing a part of that. We have a plan for our customers. So we launched our Hyundai Assurance Program, which is confirming and assuring to the customers that MSRPs are not going to go up, I mean, in this, at least this couple of months. So we are very good in uncertainty.
You just heard from auto industry leaders at the New York Auto Show this week, diverging from automakers like Ford this morning as the company teases price hikes due to tariffs as early as this May. All vehicle imports in the U.S. currently facing that 25% tariff and additional tariffs on auto parts set to take effect by May 3rd. President Trump has floated the idea of pausing some of these tariffs. Joining us to make sense of the back and forth, John Bozzella, Alliance for Automotive Innovation CEO and President. John, great to have you on this morning. Where do the automakers sit today? Because we have some folks telling our reporter on the ground at the auto show that they're not going to increase prices. And then you've got Ford, who makes 80% of their cars here, 80% of their production is in the United States already, saying they have to raise prices.
Yeah, we're right in that the midst of maximum uncertainty. Yeah. So here's what's happening. Automakers, and you heard this in your lead-in part of the segment, are committed to building more here in the United States. And we share this ambition with the president. We want to build more vehicles in the United States, and we have the capability and the capacity to do that. We want to build more parts and major components in the United States. There's no disagreement there. The challenge is, how quickly can we do this? These are massive, complex facilities and supply chains that just can't move overnight. And so what you're seeing is there's going to clearly be some impact in the near term with tariffs. That impact is probably going to be twofold. One, prices are likely to go up, and therefore sales are likely to go down as companies are adjusting and then bringing more production here to the United States. So that's the tension you're seeing. Yeah. It depends on where companies are in that continuum, I think, is what those announcements are telling you.
How much more does this cost consumers for cars in the near term?
Yeah, it's hard to tell, right? Because, but it's going to cost everybody something. And the reason for that is that there's no purely American car. There's no car that's 100% American.
Because of parts and where they get
Because of parts, right. And we have relied as an industry, for example, on duty-free trade across North America for over a quarter of a century. And that has made the U.S. industry more competitive, more dynamic, and has provided more affordable vehicles to consumers. And so as we start to unwind that, and especially as parts tariffs kick in, there are going to be price increases. I've seen ranges from $3,000 to $9,000 per vehicle. It's just really hard to know. But there's no question that these increases could be sizable.
Help me square that with what I heard you say earlier, that there is a will and a capability to move this manufacturing to the United States. Do automakers really want to do that? Like, for the real, when you talk to them, when the cameras are off, do they really want to do that?
I think that companies that operate here, here's the way the business works. You want to build near your consumer ultimately, right? It makes sense in an industry with long lead times and where you're trying to understand what the customer wants, maybe 3 years after you're starting to design and develop the vehicle. And so I think most companies have an ambition that they want to build where they sell. Now, what you have to recognize, and if you look at this market benefits from a mix of domestic produced vehicles and imports. What that mix does is it provides more affordability and more choices for customers, especially at the low end of the market, where you see most of those vehicles below $30,000 are imported. And so you have to have that balance. So what companies are saying is, I think I'd like to do more, and I think I can in some cases do more, but I don't know to what degree everything comes back, and because I think you need a more vibrant market.
From what you're hearing from companies, how are they factoring in who is building these vehicles? And specifically, I mean, you've got humanoid robots that could be running around some of these factory floors at Tesla in the near future. Elon Musk loves to talk about Optimus and all of the great things that are going to come there. But that's a direct impact on the number of employees in other manufacturing plants that have jobs, have had jobs for decades, and are trying to make sure that they're continuing to be part of that fabric as well.
Yeah, look, the jobs question's a big one, right? Automotive production in the United States is very efficient. It's a high productivity business. You do see a lot of automation. In other parts of the world, maybe less automation. So as vehicles come here, vehicle production comes here, it may be a little bit more highly automated than it was in plants in other parts of the world.
All right.
John, thanks so much for taking the time here with
you.
us. What was your favorite concept car that you saw at the auto show? Huh?
Oh my gosh, you'll get me in trouble.
I know.
I will say there's a Genesis concept car, which is an off-road SUV with the most elegant lines you've ever seen.
All right.
I'll have to check
There
it
you
out.
go. For us New York City drivers.
Exactly.
Take a look.
Right? I can take that one over the Williamsburg Bridge. John, thanks so much for taking the time.
Thank you.
A new poll coming out from Allison Worldwide and Harris X is monitoring the auto industry as the tariff landscape rapidly changes. The results highlighting that U.S. consumers are anticipating vehicle prices to rise 14.4% during the next year. For more, we're bringing in Rebecca Lindland, Managing Director and Head of the Global Automotive Industry at Allison Worldwide. First of all, Rebecca, it's been a long time and it is fantastic to see you. Well, Rebecca and I have been talking about cars for a long time, but it's been a minute. So, Rebecca, this report is really interesting. So if I'm a car shopper and I think that prices are going to go up 14%, does that mean I don't even bother to go to the dealership? Do I go and try to negotiate? What do you think this is going to mean for consumer behavior?
Yes, well, first of all, Julie, it's so great to be on with you again. I'm so excited. I was delighted to see that you were going to be my partner in this. So yes, what's interesting and really important for consumers to know is that the current inventory of new and used cars on dealer lots today is not subject to tariffs, or to new tariffs, I should say. So if a dealer is trying to charge you a tariff upcharge, go to a different dealership because they're not subject to it. So while we do see consumers anticipating pricing rising, the current lot should be tariff-free, and so go and negotiate.
Rebecca, you also track how Americans are feeling right now about different brands, different models. What do you see, Rebecca? What do they prefer here?
Yeah, so Josh, what's interesting is that across the board, regardless of where a brand may originate, whether it's BMW or Toyota or a Chevrolet, all consumers that are shopping for, regardless of brand, all feel this concern. Consumers are worried about rising interest rates, which is interesting because the Fed's actually reduced interest rates in the last three times in the last quarter in 2024. So it's a matter of perception. So interest rates are actually getting better, but consumers don't feel like that. So, but it doesn't matter which brand you shop, all brands are subject to this perception that prices are going to rise.
And Rebecca, as you mentioned, the tariffs haven't yet hit the inventory that's in the lot, and there has been some evidence that there's been this sort of rush of buying as people try to beat the tariffs, so to speak. How long do you think that could last? Or I guess another way of asking it is, how much inventory do auto dealers have on the lot now before they have to get more cars in that could potentially be tariffed?
Right. Well, every brand has a different level of inventory, some more than others. Of course, we've seen the announcement that Jaguar Land Rover will not be importing cars for right now. But so much of this is constantly changing, which is why Allison and Worldwide and Harris X, our partner agency, why we're working so closely together to monitor this situation. So again, it really just depends. What I would encourage consumers to do is to do your research, to talk to your dealer if you're in the midst of negotiating or looking at purchasing a vehicle. But we are seeing changes. So according to the survey that we just did, 41% of people surveyed are now unlikely to purchase, or very unlikely to purchase, a vehicle. And this is up from 28% just a couple of months ago. So we're definitely seeing a drawdown. We're definitely seeing a contraction in likelihood of purchasing.
For those who are interested though, Rebecca, I'm curious, what are they interested in? Is it traditional gas, hybrid, EV? What do you see in the data?
So we're continuing to see some constraints on electric vehicles in particular. And what's so interesting about this, Josh, is that in 2024, EVs accounted for about 8% of new car sales. And this is a pure battery electric vehicle. We still see about 8 to 9% of people saying, I'm planning on buying an electric vehicle. We just can't seem to get past the single digits, despite having a really wide range of electric vehicles available from all different brands, all different price points. It's just a matter of getting consumers into an EV. And I have to say that, there's fantastic experiences with electric vehicles. They have great torque. They're so much fun to drive. They have the latest technology, but consumers still are concerned about range anxiety and charging anxiety in particular.
Rebecca, we've been talking all about the consumer here, but I'm also curious about your perspective as a veteran of being connected within the auto industry, right? So I'm curious what you're hearing from your contacts, how they're feeling right now while all this is going on.
Yes, Julie, it's such a matter of wait and see. Each manufacturer has approached this quite differently. We have seen both Stellantis and Ford pushing the idea of not only are they largely American made, but they're also offering consumers employee discounts. So you can go in and as if you were like a Ford employee or a Dodge or Jeep or Ram employee. General Motors has taken a little bit different approach. We've seen them announcing a change for their light duty pickup trucks and consolidating some production at Fort Wayne, Indiana plant rather than in Canada and Mexico in an effort to avoid tariffs. Remember, of course, as your audience well knows, the automotive industry is highly capital intensive and it is very challenging for the industry to change. This is moving, you're talking about a giant ship trying to change course, and it's going to take time. But building where you sell is always a good policy. And that's what really the Trump administration is trying to do is get localized production and bring back to the U.S.
Rebecca, great to have you on the show today. Enjoy the weekend.
Thank you so much. You too. Great to see you both.
President Trump's 25% tariffs on cars imported to the U.S. officially taking effect today. Automakers responding to the new levies. Volkswagen planning to add import fees to the sticker prices of its vehicles shipped into the U.S. Meantime, Stellantis pausing production at some plants in Canada and Mexico. And Ford benefiting from its larger than average inventory, announcing discounts for customers. Joining us now to break it all down, Diana Lee, Constellation's CEO. Diana, great to speak with you. Just ran through a lot of the impact we're seeing on individual names, which I know you follow very closely in your role. Talk to me about who is best positioned amid this moment.
So I think the most interesting part about all this is just because tariffs are actually announced as of today, it's not like it's going to get affected immediately. So what I mean by this is there's a lot of cars being imported right now into the US. Those vehicles were ordered over 2-3 months ago by the distributors and the manufacturers. So even though they're coming in, it's not like those vehicles, they can go back to the original distributors and say, hey, you're going to get a tariff today on those vehicles. So how the impact is really going to happen is truly 2-3 months from now. Because as those orders are happening as of today, the tariffs will actually be a part of the pricing. There are some manufacturers like Hyundai that said that they're going to actually eat the tariffs. The most interesting part about this is even if they eat the tariffs, offers are gone for new vehicles. You can't eat the tariffs and actually have a 2.9, a 4.9, or incentives on these vehicles. So if offers all go away, the prices of every vehicle, even if they eat the tariffs, will still be higher. So there won't be any incentives. Yeah. Supply will also be a factor because people are trying to figure out where to actually distribute the vehicles to actually have lower tariffs. But what people don't understand is based on the parts of every single car. So even Tesla and Rivian, who actually make all their vehicles here in the United States, will still have tariffs on the imported parts. Tesla has imported parts coming in from China. They have gone to the U.S. administration, trade administration, to ask for an exclusion.
Mm-hmm. Yeah, do you anticipate any of those exclusions, any negotiations moving forward?
Yes, there's negotiations all happening in the background. And the frightening part of this during the negotiations is some of the OEMs are basically saying they won't actually supply the U.S. any vehicles. Now, what happens then? It then would mean that U.S. would actually lose jobs because you wouldn't have jobs here in the United States with all these automakers actually whether they as they distribute into the US, there's a lot of US citizens that work for many of the auto manufacturers. So if they start laying off because of the fact that they can't distribute supply here, then it will affect jobs in the United States.
So the expectation is the average life of a car on the road will just go up?
Exactly. Yeah. So all new vehicles coming in the next 2 months will start actually climbing. And then the vehicles here will also be more expensive because right now we're at an all-time high of car sales because people know the tariffs are happening. So March was an amazing month. April will continue because all used vehicles, people are going to try to get those vehicles, and new vehicles that are currently on the ground will not have the tariffs and currently have incentives.
Pulling forward that demand. Will we wake up in a moment when the car companies will just not be offering some of the names that we're used to, some of the models that we're used to?
Exactly. So what's going to end up happening is the cars that are more expensive to make because of the supply disruption, they will not make those vehicles anymore. Those models will start going away. And then the frightening part is some of the OEMs are basically saying they won't actually give any supply. Well, if that happens, we will go bankrupt here in the US for those automakers, and all those jobs will be eliminated.
For consumers who are really concerned about the price hikes that are going to be happening here,
sure.
What is your advice to them? Is there any specific model out there that is most likely to have the smallest price increase?
Yes, so amusingly, obviously, it will be Tesla. Tesla will be the winner in all this. And that's also scary to me because there's 25 traditional automakers that have all funded the US American economy. And so from there, because parts are also more expensive, the consumers would actually have to pay for servicing of the vehicles at a higher rate as well. So anything to do with auto will end up going up. Hyundai has announced that they're actually advertising vehicles on Amazon, but that's at MSRP. And so as it's at MSRP, there are no discounts. Discounts are going to disappear on vehicles right now because short on supply, no offer and incentives. It's exactly like COVID years coming back. COVID, no supply of new vehicles, right?
Right.
No incentives on cars. That's going to happen again.
I do want to ask, too, on a stock market level, it's interesting we're seeing Goodyear ripping this morning. The stock was up as much as 17% earlier. Now it's up about 10%, and you can see that on your screen here with our Yahoo Finance platform and our tools there. Diana, what does that move tell you about where there is opportunity for investors right now, and then, of course, the end impact to consumers?
Yeah, so parts that are assembled here in this country will definitely be a winner. As supply chains are all changing right now, it may come out that there are announcements like Hyundai saying that they're going to put investments here in this country and start building plants. And so there's going to be winners and losers based on who is actually producing all parts and all auto products here in the United States. That's really what's happening. And there's a lot of background conversation right now with President Trump in terms of negotiating future rates of actually producing things here in the country to avoid the tariffs right now.
Diana, thank you so much. Come back soon. Really appreciate your insights.
Absolutely. Thank you so much.
Appreciate it.